Hello and welcome to the GrandWest Biz Show. Absolutely wonderful to have you along with us here today for this ride. My name is Dougal and I'm joined alongside Rhoda as well as Damien. But before we get into them, let me just tell you right now, this is an interactive show. So thank you very much for taking the time and joining us here today on the GrandWest Biz Show. Interactive, so we look forward to your questions and comments and of course be part of it, because this show is primarily designed for one thing only: to make your business sustainable as well as to scale your business, all courtesy of GrandWest, which is giving you this amazing advice on a platter. Now, you might be asking, what is the show all about? Well, let's get into it. It is the Enterprise and Supply Development Program. So this is the context, this is what we are talking about. And in a nutshell, what it boils down to is that the ENSED program allows local businesses an opportunity to apply for business support. And this can come in the form of grants from GrandWest as well as interest-free loans. But there is so much more to this, because you get a business support program, and this will be provided by the likes of, let's say, Optigrowth, which entails support in many forms as a business participant. So we're talking here marketing, finance, accounting systems, and all of that. How do you apply? What is the criteria? Who do you contact? Well, don't worry, because I am going to share that with you as well. But like I said, it is an interactive show where we look forward to your contributions. And in fact, I think that is where we're going to kick things off today as well, with a poll, which I will explain to you as well. But in a nutshell, today we talk financials. That is what we're talking about, which is the business of language, isn't that, guys? But firstly, let's say hello. Rhoda, how are you?
I'm good, Doug. I'll just give you the same financials, made my hands sweat.
Is it? So Rhoda is an ENSD beneficiary.
That's correct.
So you've gone through the program, and you say now financials, you immediately said nervous things.
Exactly.
Sweaty.
It's very sweaty, very
Is
scary,
it?
yes.
All right. Now, Damien, you are a provider, so you bring the knowledge to all of this. So you are what we call a ENSD provider.
100%, yeah. So we try and help bridge that gap between knowledge and implementation. So the idea is to take what the theory says, what best practice is, and to help guide our clients and the ESD beneficiaries on how to implement these structures in their business.
Yeah, so you see, this is what the GrandWest Show is all about. So you're getting experience as somebody who's walked the road, and more importantly, you're getting the knowledge. And ultimately, of course, this is why I say it's an interactive show. So we are going to conduct polls throughout the program as well. Now, right now, you can see a QR code there at the bottom bit of your screen. So what I want you to do is simply scan that poll, and we're going to pose a question to you, and that will kind of set the tone for us today. So we'll definitely do that. So right immediately now, just simply take out your cell phone, sort of take a picture of that QR code, and we're going to have that poll up, and then we will look at those results as they come in as well. So we'll give you a couple of seconds to do that. Now, Rhoda, let's just start off while people are scanning that QR code immediately. Let's just start off here. When we say financials and financial management, and Damien alluded to this, the language of a business.
That's right.
When you started, before the program, I mean, you're a proficient business owner now because you've gone through this program. But when you started out, did you have any idea?
None at all, Dougal. You know what, is one of those things that whenever business people got together, financials was never discussed, because it's one of those scary topics, because you still see people having Excel spreadsheets and, doing things a bit differently. And this was me as well, not knowing exactly what I needed to do. So it was one of those things you avoided. Accountant you avoided, and the financials you basically avoided. And it is really, really scary. And when I started the program, when things were mentioned, there was a lot of stuff I really did not understand what they were talking about. And that was more the fear of not knowing.
Now, is it also a case that you just assume and you're too scared to ask, because you know how business works? You make money, you sell services, products, you get the income, you spend it.
Exactly. So there's certain basics you put in place, but if you really need to know what is happening within your business, you need a structure, you need to basically have something in place.
All right, so that was your experience.
I just want to add to that quickly. So I think one of the big things that we pick up on is that business owners tend to be very good at what they're good at. So they tend to like taking on things like the technical aspects of, how they run their business, how they deliver their product, to service their products, but they don't always know the back ends of how business operates. And I think the big scary part is they don't want to be wrong. They're the business owner, they're the leader of the company. If they can't show that they understand how their business is operating, it's almost like a failure.
Yeah.
So they're more scared of, I think, the failure than the actual lack of knowledge sometimes. And I think that's where the language of a business and the discussions around financials takes a bit of a different turn, because you don't have to be that accountant.
Yeah.
All you've got to do is understand a few basics of how to read your financials, and then revert back to the experts if you need more help.
Exactly.
And I want to get into that as well, David. I want to get into it to get a sort of broad definition of it as well. When we talk the language of a business when it comes to financial management. So that is what we're going to do. Now we're going to do the poll.
Perfect.
That is what we're going to do. So should we start off there, and we get our poll going as well. So hopefully at this stage you have definitely clicked on that QR code. We're going to put a question up there for you, which is, does financial management scare you? And I want you to answer this truthfully. And as the responses go through, we will put that out as well. So does financial management scare you? Now your options, as you can see, are there. You have no idea, not really, but don't understand a lot of it. The third option is, no, I have everything under control, absolutely wonderful. Or thirdly, you don't care. So Damien, while people are answering that, we're going to answer that. In a nutshell, quickly, tell us what you use the term language of business.
Yeah. So financial controls, people tend to only think about accounting. And I think what we tend to avoid then is the forward-thinking part of how to do your accounting work. So if we define accounting is the transactional management of a company. So how do I take the money I'm spending, the actual, the spending of 150 Rand on this product or on a coffee or marketing expense, and where do I allocate that expense to? The accounting part of it looks at the history of the business. So everything you do in accounting is always going to be past.
Yeah.
And the question then becomes, then how do I look forward? And that's where the financial management part comes into it. So financial controls as a nice broad topic and a group of topics talks about your accounting, the historical data, how accurately do you record that? And the financial management talks about planning forward and budgeting and putting targets in place. And then of course there's a very nice little scary thing of cash flow as well.
Okay.
So there's a there's a little phrase that I like to throw around, revenue is vanity, profit is sanity, and cash flow is reality.
Yeah.
And it's, we can explain it a bit later, but it effectively talks to there's very different views of looking to financials. People boast about the fact that they're making R1 million a month, or that they have sales R1 million a month, but that R1 million means nothing if your expenses are too high, if you're not paying your profits, and the business actually doesn't work. So again, if you're talking financial controls, it's about historical data, forward thinking, and what's actually in the bank as well.
So it's more than just the language of a business. It's almost the guidelines, the rules, the platform in which the business operates.
100%.
Yeah.
100%.
And when you implemented, you saw that.
I saw that immediately, Dougal. Once I started really getting into the program and implementing it, and I'll be honest with you, it was very difficult at the beginning to actually start doing it, because you as a business owner are set in the way you've been doing it. It's like somebody drives under the K53 and somebody's been driving the old way. So now you're asking me to do driving the K53 way, and I've been doing it the old way. So that transition was very difficult, and it took me it took some time before I actually could get there.
All right. So we had the poll up, and let's reflect on some of those answers so we have an idea of what we're dealing with. So we asked you right up front with the poll, and thank you very much if you participated in that. Does financial management scare you? That was the question, and you had a couple of options there, like no, you have absolutely no idea what it's all about, not really, you don't really understand it, and if you were very, very successful, of course, you would have said you have everything under control, or you don't care. So we've clearly heard now that it is something you've got to understand, because these are the guidelines. So we're going to have a look at those answers though, then, and of course then establish from that point to exactly what we are dealing with. And during the course of the show as well, we invite your questions or comments wherever you're watching this on YouTube, or if you've joined us on Zoom. If you have any questions relating to maybe Rhoda's experience, her journey up until this point, as well as the knowledge that Damien provides, by all means, pose those questions through to us when you can. All right, so
if I can maybe just jump in quickly.
Yeah.
I think one of the we're talking about the sort of a legacy item of how a business owner will operate the financial controls, and how they'll take forward what we're sort of trying to implement in a business. And I think one thing we picked up a lot in our experience with working with small business owners is a lot of the ways that you function in your company, or previously functioned in your company, that isn't the right way of doing it, is running your business through your bank accounts. So Rhoda mentioned Excel spreadsheets. I think that's already a step maturity ahead of where most business owners start. My personal accounts, if I don't have money in the bank, I can't do anything. Right? If I've got cash in the bank, I can start spending, I can start doing more work, and many business owners tend to work on that sort of assumption. What we forget then, or what we don't know, and what we need to try and investigate and get right in our companies, is remembering that on your accounting system, when we're invoicing an amount, that invoiced amount isn't money in the bank. So your reporting and the aspects of what you're reporting on have very different meaning to what's actually physically in the bank as well. So when I go back to the discussion about revenues vanity, profit is sanity, and cash flow is reality, that whole view looks at what does my report say? So yes, revenue is one thing. What does my profit say? Does my report and my profit and loss statement show that I've got a profitable business? And the last one is, do I actually have the money in the bank account? Now that's already a bit of a difficult concept for most business owners to grab, because why? If I invoice, I don't have money in the account. And the easy answer is there are payment terms in most companies. Most companies deal on an invoice basis to a 30-day payment term. So if I invoice today, the money only gets to the bank 30 days later, if you're lucky. Because sometimes customers don't pay you on time, right? So whether I got profit or my profit and loss statement, the bank doesn't always show that cash in that bank. And there's various ways of dealing with that, which is why the big sort of the three items we look at for financial controls is accounting. Does the business show that it can operate correctly? Does the business model work in that company? Do we have a forward-thinking view of what's going to be happening? So do I have targets and budgets in place of how the company's going to be operating in the next 6 months to a year? And then lastly, is there actually money in the bank to spend? Because I can't operate without money.
Exactly.
And I think most business owners look at the one thing, or most new business owners and less mature business owners look at that money in the bank as the be-all and end-all of it.
Do you find, I mean, because you do this as a business advisor, do you find that most businesses have some sort of idea or no idea?
I think it varies. I mean, I think Rhoda will agree with me. It all depends on what your experience has been. I mean, I can talk to somebody now who's just started a business. They've come from being employed, and they've never had to deal with it because they've had a financial department in their company dealing with it. So they didn't understand that you've got to either open up a Sage 1 or a 0 or a QuickBooks account to help manage that process. Automate the process with regards to bank reconciliations and drive through the reports. So the only thing they know is, if I go out, I've got to quickly make a quote or an invoice out. Do I do that via Excel, via Word? Do I send it out via PDF then? Do they pay me on time? Do they not pay me on time? And the only thing they can think about is the money in the bank. Because if the money's not there, there's nothing they can do with it. Whereas as the business starts maturing and starts building that record of what's happening, your banks start looking at giving you overdrafts, facilities to draw from. You start building up the cash reserves. So if the money doesn't come in on time, there's a way of spending and driving the money forward, or driving the business forward without necessarily having the cash available at that point. So it's, again, long answer is every business is different.
Exactly.
I can have a qualification in doing a BCom, where I've done accounting at Vastu at school.
Exactly.
So I may understand the concepts, but I don't actually know how the in practice work operates.
Can I comment on that, Dougal? And classically, me starting this program as well, we've had to basically almost like build a relationship on, Optigrowth understanding our business, because like you say, all our businesses are different. So, you're bringing a program to me, and I'm basically looking at this, and I need to say that I can implement that into my business. So, you know what? Having to get the clarity on saying, okay, let's look at it and let's implement it into your business. Because like you say, I couldn't understand it at the beginning, because I kind of thought it's just set for a certain business, but it ended up being that I needed to look at my business. Like you say, everybody's business is different, it's not the same. And just looking at it, how can I implement that thing into my business? But that was very difficult for me to say at the beginning.
And I think it takes time. I mean,
it takes time.
Look, you've got to learn a system. You've got to learn how to, just how to ask the right questions.
Yeah.
I think the hardest aspect that we find, especially with newer businesses and owners who maybe aren't as versed in accounting and talk and accounting understanding, there's that reluctance to ask questions.
Oh yeah.
They want the answers, but they don't necessarily know how to ask the questions.
Exactly.
So as the advisor or as the accountant sometimes, you assume your client knows what they're talking about. Because when you say something like, oh, so your profit margin sits at this, I'm assuming that they know I'm talking about net profit margin versus gross profit margin. And really those two things are vastly different results.
And did you know any of these?
No, I'll be extremely honest, Dougal, I didn't know anything. I was sitting there and all these things were mentioned. I was like, okay, let me just try and breathe through this, because it was quite a bit actually to absorb. But you know what? It is a process. It's not something that happens overnight. It is basically looking at it, implementing, and actually putting a bit of hard work in it as well. You can't expect just things to fall on your lap. You as a business owner need to sit and say, you know what? This can work for me. I need to make it work. So, and it's all up to the business owner. It's all up to us to make that difference.
And I think we can agree as well. It never ends.
It never ends.
You're always tweaking a little bit. You're always adding a little thing here. You're always revising how you report on things. So it's a constant growth and a constant maturity as well.
Exactly. So
All right. And we look forward to hearing all of that. Now, of course, I told you this is completely interactive as well. So if you've got a question, definitely pose it. Rhoda will definitely reflect on it with her experience. We'll get David to drop in with the knowledge as well, or at least what the textbook answer is. But as we've learned now, with just listening to the two of them, things adapt, things change. And we actually do have a question as well that we're going to put up for you shortly as well, which is absolutely brilliant. So before we get to that, let's just look at those polls that we got there. So we asked you in the beginning, does financial management scare you? Not really, but don't understand a lot of it. That is where the bulk of the answer is. Okay? Not really, but people don't really understand it. So given what you've explained in terms of the definition and what you said as well, that seems to be a general consensus here with the polls. And thank you very much, everybody, for adding. That seems to be the general consensus there.
Well, I think the reason why, again, I'm talking from my own experience and insights, I think the reason why that is because when you do go to the bank or you do go to someone for a loan or for a grant or a bit of help, they're expecting you to give them some sort of report or some sort of feedback. Every business has to go through either a compilation, a review, or an audit, depending on your size. So I think many business owners are interacting with financials, but they might not fully understand the way to read into it and the way to understand it. So we understand the value of it. We understand we need to have it in place because if we don't have it in place, no one's going to help you, no one's going to understand you or work with you. But we might not understand the nitty-gritty of what the relevance of each report is or each method is of doing it.
Yeah. So when you understood it, things earlier you said things got better. All of a sudden now we look at sustainability. You could make better business predictions, forecasts,
Exactly.
I think is what people call it.
we're still going to get to that scary word, but exactly that, Dougal. It was like, when they're talking about the penny that drops,
Yeah.
it was really that point where the penny dropped, and it made such a massive difference in my business because I truly believe once you got your financials sorted out, you can then see your future. But if you don't have any structure for finance, and that's why, financials for me are top of the list. Having to do or make business, it's fine. But if your financials is not in place, no matter how much money you're making, no matter how much work you put into your business, if you don't have financial management, you basically your business is going to go down. Because for me, I can now look at and see where I'm losing money, where I'm making money. And this is where the difference comes in for a business, is where you're going to look and see, this is actually bringing me money, this is wasting my time. I'm spending more money here and not making any profits. So this is where the financials come in, where I can actually look at this now and make a decision on saying I need to drop this and not spend as much energy on this is making me money.
I also want to add to that. I think another thing that we pick up on is everyone thinks once I do financial management, put the controls in place and use the systems that I have, that my business gets better. Maybe not. I mean, if your business isn't operating well, if your business isn't doing very well, the chances are you're not going to see a very good result from adding or putting in the financial systems in place. And what I mean by that is you're going to realize how badly your business is actually doing.
Exactly.
So, which is also scary.
Which is also scary.
Right? Imagine, and I always like using the idea of fitness and training.
Yeah.
Imagine never going onto a scale. Imagine never doing a test to see how much body fat you carry, how much muscle mass you carry. And all of a sudden you go for that first test or you go for that first identification, the first report, and the results are terrible. Right? The first thing you do is, okay, fine, what do I change now? Do I change eating? Do I change exercise? Do I change sleeping habits? What do I do? And I think that's where the benefits of financial management come in then, because you're giving yourself a view of how healthy your business actually is.
Exactly.
I like that, and I think that is a great way to look at it. But of course, it comes down to statements. Which is the next phase I wanna sort of go into, because I know income statements. I've heard that word before. Income. I like that, income. I don't like so much outgoing, but income statements. So we've defined now financial management, and I know we've got one or two questions on it, and I think that's going to fall more on the income statement. So if you have said it, thank you very much. We will get to it. We will get to it very shortly. But the next phase of our discussion is going to be on income statements. So, Damien, you've given a wonderful definition, both of you, Rhoda as well, with sharing your knowledge in it. Income statements. What?
Okay, so let's talk statements first. So income statements is one of the reports we use, right? So it's only there's a few reports we have at our disposal, especially if you've got an accounting system in place. So again, Rhoda mentioned the Excel spreadsheets. if you're going to define your own spreadsheet, your own way of doing things, you're going to miss out on some of the functions that an accounting package can give you. So one of those reports we get out of an accounting package is your income statements, right?
Okay.
Your profit and loss statements. And the purpose of that report is to show you, does your business model actually work? Now again, the question is going to be, what's a business model?
Yeah.
Effectively, am I able to sell a product, produce a service with the expenses that are I suppose come with that? So my cost of producing, my cost of delivering, my fixed cost of electricity, rent, whatever else may be, into a point where I'm actually making money out of it. So your profit and loss statement or your income statement is showing you, do you actually make money at the end of every month or every year to say that your business is operational and healthy?
Okay.
Now imagine if you don't have a report like that where everything's in your bank balance, right? You'll see that there's no money in the accounts. But again, like we mentioned, your profit and your bank balance can talk about two very different scenarios in the business. The business can be profitable, but without money in the bank. Now, that brings me to the next report you can have.
All right.
I can see the confusion already, right?
Yeah.
So the next report you look at then is things like your creditors and debtors control, or your creditors and debtors receivable. And what that talks to is how much money is owed to me. So
All right.
when I go to something like a payment term particularly, the big part of a payment term is there's a 30-day result. So I invoice someone today, they pay me in 30 days' time. Most clients like that because you want to always get the goods first and pay for it later. That's good business practice.
Yeah.
The problem is most business owners tend to not follow up very quickly or push their clients to pay them because we all forget and we don't want to pay, right?
Sure.
So when I say our profits, I may have invoiced out, at the beginning of the month,
But the money's
but
not
the
here.
money's not coming through yet.
Exactly.
So another report we have to look at consistently is that report of how many of my debtors haven't paid me yet. Because then I can push, I can call the money in, because it's my money, that's owed to me.
Yeah.
I can call the money in and I can then put that back in my bank balance to then have the cash that reflects the profit again.
Okay.
So that's both with your creditors and your debtors. Your creditors are the guys I owe money to as a business, and the people that owe me money.
Okay.
Then the second last report is going to be your balance sheet, right? And we'll talk about that a bit later. And I'll run through the profit and loss statement first again.
All right.
And the very last one to look at is your liquidity statements.
All
How
right.
much money and where's the money coming through and from?
Okay, so that's
So it's a lot. It's a lot.
So that is the income statement, and I want to hear because maybe you've got a success story or a failure story or something from you. But we do have one or two questions from you viewing this right now. So I just want to turn our attention to one of the questions before we hear from Rhoda how she does that. And there's a question on the screen who says, "What is the best way to manage my financials in the early stages? Excel or is an accounting software package more beneficial from a cost perspective?" Thank you so much for that question. Thank you very much. There it is. Damien, I'm going to throw that question to you.
Okay, so try and keep it on short. It's definitely better to use accounting package. It's going to cost you a bit of money, right? The problem with going Excel is the time it takes to make up a statement like that, the time it takes to use a statement like that is time that you can use somewhere else.
Exactly.
You can use that time to actually go out and sell your product services. You can use it to manage your company instead of constantly tapping in or typing in figures from your statements. A good accounting package, everything gets reconciled for you on a click of a button.
Exactly.
Your statement gets uploaded to it, and you can get all the reports immediately without having to run any fancy, workflows or macros or formulas. It's literally the package does it for you.
Yeah.
And if I remember correctly, I might be a little bit off here, but you can get a very good accounting package for a really small business and a medium-sized business for about $300 a month.
That's so true.
Is it?
Yeah.
$300 a month.
Yeah.
All right, let me do that because Damien says if you do Excel, you got to physically now enter it. If you got an accounting package, one click. When you
Exactly.
started, did you do the Excel thing?
So when I started, basically, I didn't do the Excel thing, but I actually went to the wrong package. I actually went to the Extreme Pastel, which was more for an accountant, because the language the package spoke was more to an accountant. Where I'm using, and this is where I was introduced by Optigrowth, on a package that was more business owned. I'm not sure if I can mention the package.
You
on
can,
air.
I'm sure you can.
So I'm using cloud accounting, which is a very straightforward. I want to see what's my end of the month. Am I doing a profit or a loss? It tells me, it speaks my language.
Yeah.
So you need to look at also, as no use you're going to Pastel 17, Pastel, I'm not pushing you down, but I'm using your other package.
But I think if I can
Yeah.
add this, so
Yeah.
again, there's cloud and there's on-site service,
Exactly.
right?
Yeah.
Pastel unfortunately is the older version of what
It's the older
Sage is.
version, yeah.
So Pastel sits in your server. It doesn't connect to your cloud, which means it doesn't connect to your banking accounts.
Exactly.
Where someone like Sage, which is based in the cloud, connects to your bank and pulls your
Pulls
bank
all.
statements into your package with a click of a button, and you can access it anywhere in the world
Anywhere.
versus being in the office.
On your cell phone, your laptop, wherever.
And you use this now,
I use that Google.
and it makes life easier.
It makes life so much easier.
More
Make a
successful.
quote, make an invoice, convert a quote to an invoice. invoice, it does everything already for you, puts it into your system. I want to go see what's my income statement, what's my balance sheet, what is, just a click of a button.
So it allows you to make better, to not just to sustain, but I mean, as a business owner, you think in growth, you think in scalability.
Exactly. I just go and click and see who owes me money. So obviously, when the money makes the business go. I mean, if you don't have money, you can't keep your business going. So I click a button and say, okay, who's all owing me money? Make a statement and email it immediately. As quick as that, because Dougal, at the end of the day, time is money. So I'll rather spend 300 Rand on a package every month, knowing for sure that my income is coming in.
Yeah. I think maybe just to get the point across again, if I can. Is it better to view a report as a business owner and to make decisions, or to do the hard labor of trying to, old school, ticking everything in and trying to create stuff? The answer is going to be, if I can draw a report, I can say, okay, look, I'm in a good space, my costing is working, my spending is working, I'm making money, what's the next big move? That's where you want to sit as a business owner. You don't want to sit in this position of constantly having to do the data capturing part of the work.
All right. Emma, thank you for your question, and sounds fantastic. So now we heard Damien a short moment ago spoke about income statements and stuff. Now you've obviously so we know now you've gone through the package and all of that.
Exactly.
But I want to take you back to a time when you started out and you said it was quite daunting. Did you have any idea then at that time?
No. I mean, Dougal, sometimes it used to talk back in, thinking back now, they talk about management accounts. I was like, what is management accounts? So one of those is obviously income statement. So I really didn't understand it at all. I didn't understand why I needed it, how to read it. And I actually just had to take time to be basically shown, look, this is what it actually tells you. This is how you can understand your expenses, your incomes, where does the income fall in, where does the expenses come in with your cost of sales. Now I can speak that language. But prior to that, definitely not.
I think if we can also maybe, because we have spoken quite a bit about the income statements, I think let's go through just what is broken up.
Yeah.
Because that's one of those little things that business owners understand what profit is, I think. They understand, what your expenses look like, but what they do confuse quite a bit is that cost of sales versus your normal expenses amounts. And I think just running through the quick income statement will give us a quick idea of how to see what that profit looks like, and again talk to that business model.
Exactly.
So when we look at just the first thing that any income statement will show you is going to be how or where your revenue comes from. Now, the first mistake that we pick up that business owners do here is they just have a blanket sort of statement of sales. And I think Rhoda will, as an experienced person here, will agree. It's probably the most broad thing you put on your income statements or your profit and loss statements. I don't know if I'm selling, as Rhoda, as a photography company, for example, if I don't know if I'm selling wedding photos or school photos or this kind of stuff, it's all one big thing. How do I start planning where the next big market comes to? Am I doing better in this type of photography or this type of photography, or am I just selling one thing? And unfortunately, by not labeling your sales line items correctly, or by not giving more detail, you're not giving yourself much of a chance of actually reading your report and understanding what's coming out of your report. Right. The next part of that income statement talks to your cost of sales. Now, this is also where most business owners tend to confuse cost of sales with operating expenses. Cost of sales is purely what it costs me to deliver a product or deliver a service to your customer. Am I outsourcing that delivery of service to somebody else and it's direct cost at sale? Do I need to buy raw materials to produce the product that I'm selling? And what is that eventual cost going to cost me and the sale I'm making to give me that basic profit level? And that brings us to the next point, which is your gross profit. Gross profit is the money I'm making after each specific sale. So am I able to take my gross profit value and understand, I've lost the words now. Is my markup, markup I'm making, is that going to be enough to run the rest of the business through that?
Okay.
So as an example, if I'm paying someone a salary a month to be a marketing person, or if I'm paying out for electricity, am I making enough money out of every product I sell and in the totality of it to pay off the other expenses I have? So that's why when we talk about margins, marking up a product versus the gross profit margin, it's a very big distinction between how much I sell it for and how much profit I make out of that.
Okay.
All right. From there, we then look at operating expenses. These are the sort of standard fixed expenses a business has to run away from just selling. Marketing, internet, telephones, electricity, salaries and wages was always going to be one of the biggest ones, rentals, whatever else may be. And all those expenses then accumulate to then give you effectively your operating profits or your operating profit, and then therefore after taxes. So operating profit always talks about something before tax, right? And then post-tax we then talk about net profit as well. Now, if I'm able to make a net profit, it means I'm satisfying the shareholders' need to make money. and that profit can be distributed either through expansions or paying out dividends effectively. So your income statement, by breaking down all your transactions in your business historically, you can very quickly see, am I pricing my product correctly? Am I overspending on some expenses? Do I need to cut expenses? Or if I'm looking forward as part of financial management, if I want to grow my product range or grow my sales efforts, must I add more to it and therefore increase my expenses as well? So this income statement is a very big part of understanding, does my business model work, and am I able to produce a business or run a business that is making money?
So true.
Did you detail where your incomes came from? Because in that way you can now say, okay, I need to maybe focus more here or less there.
Most definitely. And I think the bigger, I probably went in too much detail. So I kind of had to break it down again, because I mean, Damien and myself sat as well, and we said, guys, we need to just look at what you're doing. So I have split it up. So I've got exactly like you would say, your wedding photography, graduation photography, live streaming, everything is there, so I can see exactly where I'm making and how much I'm making on each item.
I think that's an important part that I didn't mention here. By breaking down your sales items appropriately, again, not falling into the trap of over-analyzing stuff, right?
Exactly.
But breaking it down appropriately and making sure your cost of sales reflect back on what you're selling. You then have a better idea of those specific items where, am I making money on selling? Am I making more money on selling this item or less money selling that item? Is this one selling faster? Can I do more here? Can I add more there? It just gives you a chance as a business owner again to take a step back, look down at your business and work on it versus just trying to muscle through it.
Exactly.
Yeah. And what else is there when we look at this?
So looking at your financial management part, we can't avoid the fact that there are assets in the companies and liabilities. So just as a quick thing, your balance sheet talks to your assets, your liabilities, and your owner's equity, right? So owner's equity talks about the amount of money invested by the business owners. Your assets talk about the things you own effectively, right? Cash in the bank, a property, a vehicle, whatever it may be. And your liabilities talks about things you owe someone to. The general rule is your assets equals your liabilities plus owner's equity. Okay. So when you look at a balance sheet, you want to have those three things, or let's say three things: your assets and your liabilities. So your assets equal your liabilities and your owner's equity. Okay. Now, one thing that catches business owners off guard slightly is money spent on assets and money spent on liabilities don't reflect in your income statements.
That's
Okay.
Sure. Yes.
So as an example,
believe me, shocked it to me when I started as well.
So as an example, right? If we're looking at the company buys a vehicle, right? That expense, that money that gets paid out every month for that vehicle payments, doesn't reflect on your income statements. It reflects on your balance sheet because there's a liability sitting there.
Exactly.
Right? So I've got to make sure that I pay that liability because it's not part of the operational expense of the business. It's part of the capex expense of the business, the capital expense. I've got to repay something, right? So when we look at our profitability again, and this is also where business owners tend to get the profit and cash in the bank wrong as well. The profit talks about the operating part of it. Am I making money operating? The balance sheet talks about, am I investing and am I paying back the dues I owe? So when I've got a profit of, let's say, 100,000, but I spent 100,000 on debt, you can have zero money in the bank accounts. So the business might operate well, but I've got way too much debt in the business. And that's why when your accountants are talking to you about balance sheet ratios and liquidity reports and all those nice, funny things, which you won't discuss today, I promise it's just not worth it, right? It gives you an understanding of how healthy the business is. Is the business able to operate? And I look at that via my income statement. And is the business state, the state of ownership and the state of loans, is that state good as well? Because they're two different views completely.
Totally different views.
They are different views, and I'm now thinking: are they? If you now operating a business and it's not going well, but that you're looking at the statements, or as you've explained, and you've got zero money in your business because you're over indebted or whatever. What would be? Aren't there like red flags along the way?
Massive red flags. But look, I think a lot of, and I'm going to talk a little bit about the COVID pandemic as well. A lot of business owners and businesses, unless you were the lucky few who were essential, a lot of business owners took a lot of loans out to see themselves through the COVID pandemic. So they had to get their cash reserves up, and they did it either by taking overdrafts or loans. And what's happening now is we're busy repaying those loans at this point in time. So a lot of business owners are seeing that their profit and loss statements are looking very healthy. The business is operating, making money, but their actual cash that they have in the bank is being depleted because they're repaying a lot of these loans off. So until those loans are paid off, you will never have, or you'll not never, but you'll have a very low amount of cash in the bank because you're still repaying the loans you had previously. And this is where banks and investors start looking quite heavily. They want to make sure for two things. They want to make sure, can the business operate correctly? And they're going to look at the accuracy of your reporting, firstly. They're going to look at, does the business operate and make money? And secondly, how much debt or how many assets does the business have? And that'll all start determining the value of the business and how, I suppose, investable that business becomes. Now, if we as business owners don't do that for ourselves, how do I know if the money and the time I'm spending in my own company is worth it? Because if I'm not making money, if my business isn't growing and the asset that I put money into isn't getting any stronger, then why should I be here? I'm better off either closing the business down and starting a new company or trying to find a job somewhere else potentially.
And having all these reports and things in place will give you that sort of overarching view to ask those questions.
Well, I think even if you don't know how to ask the questions, to ask the question of, is my business healthy?
Is it healthy?
And I think what we need to also remember is that a big part of what we are doing as business owners is, particularly in the size of business, I'm not a business owner with my business listed on the JSE. I don't have to report back to multiple shareholders and show returns and that kind of stuff. I know what I want to do with my company. But many business owners seem to think they have to be very elaborate with what their reports look like, what their ratios are, and all those things. When it comes down to basics, is my business operating and making profits? Am I able to use that profit to buy assets or repay debts or pay out dividends to myself or my fellow shareholders? And if we can get those basics right, it makes financial management far more consumable and far more easy to understand, because the detail of it we can find somewhere else. And I think, Rhoda, you'd agree with that, right?
I totally agree with that, Damien, because it really comes down to the fact that even a lot of businesses like to go to the bank because obviously they want to either get the overdraft, or they basically want to increase their business or push their business a bit further. The first thing they're going to look at is your balance sheet, because they want to see how much does the business owe you, who do you owe money to. So they're really not interested in your income statement really to how much profit you're making, because it really comes down to how much do you owe people out there. So that makes the difference at the end of the day.
So does it now beg the question, you got to ask people, how are you out control of your financials? Because this is really what it is about, because some people might be a bit embarrassed to say that.
100%.
Any business.
Yeah.
Should we do a poll?
You can just do a poll. Please do a poll. Let's see what you say.
How are you in control of your financials? Let's do a poll on that. How in control are you when it comes to your financials? I want to ask you that, because are you in some sort of control?
At this point, let's just say I know exactly where I am, Dougal.
Okay.
So I know exactly where I need to make some improvement, where I need to make changes within my business, which I'm in the process of doing right now. So definitely I'm more hands-on on knowing exactly where I find myself, especially after COVID, knowing exactly we need to do some cleaning up, we need to do house cleaning and pick up the pieces and kind of move
and
on.
I must say, I'll commend you on the answer. I think it's one thing saying you have control of your financials. There's a few things you can't control. Sometimes people just don't want to buy your products. Sometimes the market is just down, right? So the fact you said you know your financials, or you are, I can't remember the word you use now, but control and understanding of what's happening are two very different aspects.
Totally different.
And we can guide the control, and we can definitely move around and plan for it. But I love the fact you said you actually know what's happening in your financials.
Well, there it is. We got a couple of answers in. How in control of your business are you? I keep on my bank account. I let my bookkeeper keep me updated on what's happening. I do all my recons and accounting software. I receive my financial reports monthly. All of those answers seem correct to me, and that's why I'm not a business person. So that is the thing. So, but it comes down to how in control are you? You are. How in control are you, Rhoda?
I think I'm really falling under review my financial reports monthly. So I think kind of most of them there. I do all my recounts on accounting software. So all of those ones, the bookkeeper, no. So I really look at my recon on my accounting and my financial reports every month. So that's exactly, those ones fall under my
Because we've got a split there.
It.
We've got a split there. And in your opinion, because you've spoken to other business owners, you're in the sphere, you stick to birds of a feather and all of this. In your experience, is that like a general consensus, what we see there from the poll?
Now, me personally, I think most business owner falls under keep an eye on my bank account. Because this tend to be more, what does my banking account look like? They'll wake up, obviously, first thing they look at is look at their bank account. Because for them, I think that as a business owner makes more sense. But for me, working probably more on the financial side, a monthly report makes more sense to me. Because whatever money goes into my bank account, it's still going to come out to how much is my balance sheet, which is my money I'm owing, And who still owes me money and who must I still pay?
Yeah, I kind of agree with you. I would also just be looking at my bank account. You having a look at that now, I mean...
I was just thinking, I've got a few, so I think there's nothing wrong with using your bookkeeper, right?
Yeah.
And again, it depends on the time and the maturity of your business.
Yeah.
If Rhoda in her company still has the availability to do her recons and to do all the sort of bookkeeping work because her transactions aren't as
exactly.
she doesn't have a huge amount of transactions going through every month, then perfect, because now you know exactly where things are going, you can allocate them correctly, and you can have them reviewed by your accountant.
Exactly.
But as soon as your business starts expanding, as soon as the time spent doing your recons or doing the number crunching becomes too difficult, then by all means outsource.
Get a bookkeeper.
The question then becomes, am I actually getting the information back from my bookkeeper?
Exactly.
And what we pick up from our experience is a lot of companies tend to outsource their bookkeeping services for two reasons. Main reason being that they're too scared to do their own bookkeeping because they don't know what to do. And the second reason is then they are too busy to actually do bookkeeping. But what they never do is ask for the report back.
Yeah.
So when as the last answer of reviewing, I think for me that's the win.
That's a
If
win.
I know that my clients are monthly taking their management accounts, looking at their income statements, looking at their balance sheets, analyzing their debtors and creditors analysis, and understanding where their cash flow situation is on a weekly or monthly basis, I think that's when you as a business owner have the most power of effecting a change in your company.
Wow.
Exactly. Sorry, just on that quickly. I've always got this thing as a business owner. The one person that was always on top of the game was Madonna. She don't let anybody else sign the checkbooks. If you bring a checkbook, she's not going to let somebody else sign it. She wants to know what she's signing for. And that's exactly also for me. You need to have that report. So your bookkeeper also need to make 100% sure to inform the business owner what's happening. Because sometimes business owners get busy. It's kind of the bookkeepers, if they see red flags, they need to highlight it.
Okay, Madonna.
She doesn't sign, let anybody sign.
I've never used Madonna as an example in my business.
That is a good business, but thank you for answering that as well. In my opinion, you're all winners. That is really what it boils down to. Now, I know earlier you mentioned the thing cash flow.
Yes. Cash flow is probably, I think, the most scary part of a business, right? The bookkeeping, the accounting part of it, the financial reporting part of it, those are all good things to see, but if there's no money in the bank, that's when you really start worrying, right? If you don't have access to cash, if you don't have access to capital, what do you do next? And I think this is where most business owners tend to misunderstand how to manage their cash effectively. And what I mean by that is, how do we start making sure I have money in the bank versus not having money in the bank? And there's those two reports we can look at. My debtors age analysis and my creditors age analysis, right? So who owes me money? Because if the money's in their bank account, not mine, right? It should be in my bank account. They have the luxury of having my cash in their accounts. Why is it not my accounts? The second thing to look at is how much do I owe someone else? So how long can I keep the money I owe them in my bank account versus paying someone else?
Bit of a balancing act.
So you always want to pay someone late, and you always want to get your money early. That's the general rule about good cash flow management. Now it's very hard to do when you are the small fish in the pond, right? And you have nice big customers, or you have big suppliers who can cut you off and they can do a whole range of things. But the whole purpose or the whole concept of trying to have good cash flow management is firstly to be able to pay late and to get your money in quickly.
Okay.
There's a very
But
nice
within the time frame. We're not saying go way late.
No, because look, you also want to be a good business person and not one of those guys who don't pay their bills either.
Exactly.
Yeah.
But you want to, as an example, I want to try and do a cash on demand sort of payment time. So if I deliver service, I want Rhoda to pay me today for it.
Yeah.
Versus if I'm going to get a product from somebody else, I want to pay them in 30 days. Which means that I'll always have my money in the bank account first before I pay somebody else. Versus Rhoda pays me in 30 days, I've got to pay my supplier today. But I've got to buy from my supplier first to give Rhoda her service. Okay. The other consideration is that when we talk about having cash available, many business owners make the grave mistake of going to the banks or loaners when they need the money.
Yeah.
And I don't know if you guys have ever tried to get a bond when you maybe not have enough sort of things, or when you ask the bank for a loan or something.
Yeah.
They're going to look at what your affordability is. Right?
Exactly.
If you can't afford that loan, they're not going to give it to you. So what you need to try and do is, when the times are good, get access to things like overdrafts and loans and that kind of stuff. Don't use them. Use them as a safety net. Use them as a cushion when you need them. But get access to that capital amount, so when the times are bad, you can draw from something at least.
Yeah. And I want to get into that as well, because also let's consider COVID. COVID would have been a thing, and we want to hear that as well. But sorry to cut you there, Damien. I want to go quickly to a question that we've also received. And once again, thank you very much for the question here on the GrandWest show, because it's super important. And this question says, how do cost of sales differ from a product and service consulting company, or do my labor hours in a service offering fall under cost of sale or OPEX, or does it matter where I allocate the cost? I can confidently say I have no idea. David.
I want to see if Rhoda understands the question. No, I'm joking.
Thank you for the question. Thank you.
So look, it all depends on how you're delivering the service. If you're delivering the service as an employee to the company, right, and like in my business, I'm an employee to the company, then it goes under my OPEX figures of a salary and a wage. If I'm outsourcing it, so let's say I don't have the time to deliver my service as a consultant, for example, and I've got to outsource it to Dougal to go and be the business advisor to some other business. What a poor business to get Dougal, right? Just joking. But if I had to outsource to Dougal to go and do my job for somebody else, then Dougal will be a cost of sale because I'm directly paying him to deliver a service that I've got. So I want to measure how much Dougal's charging me for his time and how much my customers charging me for the time that I've provided Dougal services for them. And that becomes a gross profit discussion versus your net profit discussion.
Okay.
That's a very good question because it's one of those things that most business owners, again, don't quite understand where to allocate things.
Exactly.
I've got clients who have salaried employees sitting on the cost of sales. There are varying reasons for why you could do that, but we won't go into that now. But generally, any salaried employee of yours, you want to put them into your expenses versus your cost of sales.
So it does matter where you allocate that cost.
It does because, again, it forms a big part of your pricing.
Okay.
Your gross profit will always reflect how well you're priced.
Yeah.
If I don't make enough profit out of my sales items, I won't be able to afford my expenses to run the business.
All right. I hope we have time for another poll, but Rhoda, I want to ask. So obviously, Damien said a moment ago, when things are good, try and get access to loans, or not loans, or overdrafts. You know, when things are good in the business. But then something out of the blue comes, COVID, just as an example.
Exactly.
Looking at all of this. Reflecting now, we sort of, COVID is something in the rearview mirror. We're moving on. If you had a loan or in any sort of form, you are in that time, I suppose, of repaying it. Looking at all of that, when we speak cash flow, how important was that for you?
Extremely important, Dougal, because obviously, just looking at my financials, looking at my costs, looking at my income, looking at my expenses, everything dropped.
Yeah.
And it was really a case of, obviously now my expenses are quite high because those expenses still stayed. Your electricity bills, all the other things stayed. Your income was cut basically not even in half, it was cut right down. So you needed to really like, okay, let me just take a step back and look at all of this and figure out how am I going to bring in more income, you know? So yeah, it was vital, very important during the COVID time to know exactly where I was bleeding, because we all bleeding at that stage.
Yeah.
In a business, all of us were bleeding. So some of us even closed. So really, it was very important.
Look, I know we're running out of time a little bit, so we want to try and keep us too short for an hour, and we can go for a lot longer on this topic, right? And again, if there are questions, I mean, please by all means ask. We can always get to it a later show at some point. But I think one of the big things that COVID taught most business owners and taught the business environment is that as Africans and generally African businesses, we don't prepare or have a cushion to land on.
Thanks.
So when something bad happens, are we ready for something bad to happen? When the money dries up, is there something we can fall back on? And I think many South African businesses, particularly South Africans in general, we are one of the worst saving nations in the world, right? Yeah. Many South Africans didn't have something to fall back onto. They didn't have access to cash. They didn't have assets they could quickly get liquid and then sell their assets off to get more money in. We were stuck in a situation where if you were living month on month, if you're a good business and you want to operate as a company with a bit of forward thinking, a bit of financial management and planning, you tend to want to have cash reserves available for a certain period of time, a 3-month period, a 6-month period. If you're very lucky, maybe a year period where there's money sitting that if nothing happens in your company, you can still afford your expenses at least.
Yeah.
Now, that sounds easy. It sounds like a good idea, but it's definitely not easy to do, especially when when we've had COVID, or you're a starting business, or you don't have huge funders or huge shareholders. We have to try and make sure that we do start putting some money away as a bit of a cushion to land on if something like COVID had to happen again. Exactly. And I think, I've got a slide up as well if you want to have a look at it. One of the big things to remember is your credit score is important as well. You know, as a business owner, you're a director of your company. When the bank looks at giving you a loan or funding for growth, whatever else may be, they're going to look at how good the director's credit scores are as well.
So you've got to constantly monitor your credit score.
You've got to monitor it. You've got to remember that every time you go for an application, the bank or the credit bureau does take a negative stance on that because you're applying for more money, so your score might drop if you don't make a payment. So, for example, if you don't pay your car payment on time and you miss a payment, they're going to negatively affect your score. So you want to make sure as a business owner, particularly a director, that you keep your score up clean because the bank will always look at that first as part of, are you a good repayer of debt?
Ah.
And this doesn't mean don't have debt.
Yes,
Because
that's also
unfortunately,
another
if you have no debts, you can't be you don't have a credit score.
thing. Exactly.
So the conundrum is get some debt, get a good credit score, and then if you ever need to have a loan for expansion or whatever else it is, then go make the application.
Yeah.
You keep an eye on your credit score?
Yes, on Clear Score, I actually get a message coming up all the time telling me my score, and I do. Thanks to Optigrowth and GrandWest for the opportunity.
So, looking at all of this holistically now, I mean, do we understand financials a little bit better? Because it is seriously something that is
it's a massive
it is in-depth, and it's the bulk.
And look, it takes time. I think, when we were working at Rhoda, it took us a good 3 to 6 months to get sort of comfortable with this, right? So it's not just a case of let's expand. Because what happens is you've got to go out and practice what you're doing. You've got to go out and make mistakes and relearn. And I think if we just take this session in whole as a whole, my first question is: do you understand the control aspect a bit better? Right? Do you understand the fact that there are different reports that show you different things? And if you missed that, by all means go back in the video and have a look at it, because again, I want to know, is my business healthy? Is it operating healthily? Do I have enough assets and liabilities and owner's equity with it? And where's my cash sitting? Is it in my bank or is it someone else's bank? And if we can understand those broad concepts around it, you're at least on a better footing moving forward to talk that language, to understand where your business is at.
Yeah. So when it comes to the financial reporting, and I think we should do one more poll.
Okay, cool.
Can we do one more poll? Because obviously there's been some insights now and knowledge shared, so it changes the answer a little bit. I'm just going to add a question that I know more than what I did a moment ago. All right, so let's look at this. So when it comes to financial reporting, how well do you understand your financial reports? How well do you understand it? And of course, this is now reflecting on everything you would have heard during the show so far. So how well do you understand it? So firstly, I don't open my report, of course, because it doesn't make sense to me. Nothing wrong with that. I would fall there. I understand the basics, but just, very basic. I can make decisions about my business using my financial reports, which is, I think, where you want to be. And I have a thorough knowledge of how to read my financial reports, which is kind of hand in hand with the other one as well. So that kind of makes sense as well. So choose one of those. Let's see how we do. That will be our final poll forward. Rhoda, you answer the poll there in your experience, you Googling at the answers.
Exactly, Googling the answers. Yeah. Number 3, I can make decisions about my business using my financial reports. That is very much where I am.
And does it make easier? Can you see, ultimately the hard question is here, can you see growth in your business? And since using these methods, making sure of the services and of course the help that GrandWest is providing in this instance, could you see growth? Could you comparatively compare year on year?
Oh, most definitely. And it really comes down to do hard work. If you really think you're going to get in this program just because, I'm just going to get a grant, I'm just going to get financials, you know what? It actually comes down to business knowledge.
Yeah.
And you need to put in the hard work. You need to sit and do your homework. You need to look at your business and actually really get into the program. Once you do that, I can personally tell you from experience, I've seen the growth, and I'm grateful today sitting here for GrandWest for giving me that opportunity, because it really opened my eyes to so much more.
And I almost think, man, when you do all of that, making your business sustainable almost happens by chance. It's growth as well, just by doing the basic. All of these other great things just happen.
Well, again, let's just go back to the fitness analogy, right? If I know what my body needs to survive, I know my body needs to get healthy and how to move forward, surely I have a better chance of doing the hard work and the hard graft to get my body healthy. If I avoid it, if I don't look at it, if I don't get on the scale, if I don't go for a run, if I don't measure if my run's actually helping me, I'm not going to be a healthy person. Right? As a human being, I won't be good, right? Business is the exact same. I just want to add this one more point, and I think, and we'll definitely be discussing this. This is a topic, I think, because it's a big topic discussion as well. The one thing we have to remember is the ultimate goal of a business owner is to grow your assets. Right? Your company is like a house, right? I want to grow my asset as much as I can. The only way to value that asset is through financials. I can't talk to someone about how good my business is, because where's the hardcore data about how good that business is doing? So I have to make sure that my financial controls are in place to show somebody who wants to put money in, or if I want to sell my company, something like that, where I can show them how much value is actually sitting in this company. If I don't do that with good financial controls, where else are you going to find it?
Exactly. All right, so let's quickly look at those answers there. Because we haven't looked at it now, where do you think most people would fall under
I would say either question, I think answer 3 or answer 2 would probably be the average.
Yeah.
I think a thorough knowledge of financial reporting is quite a high skill set.
It's a very high skill set.
Okay, nobody chose my one that it doesn't make sense. Well done. Well done. All right, but there we kind of have a sense of it. But that brings us to the end of it. So thank you very much for participating and being part of the show. We're just going to get some closing thoughts here from Rhoda and Damian as well. And you, as I mentioned to you right in the beginning of the show as well, when it comes to the E and S&D program, of course, how can you be part of this? Because ultimately, this is where GrandWest is coming in, taking you by the hand to ultimately give you what any business wants, to make your business grow, so scalable, and of course, making your business sustainable and, shielding yourself from that rainy day. So Rhoda, from your side, before we give criteria and where people contact to be part to get more assistance with the E and S&D program, closing thoughts from your side.
For me, guys, you know what? This is a brilliant program. The opportunity, like you said, the silver platter is being offered to you. And you really need to look at this program, and the holistic program, and really take everything in on this. It's just not about the monies, because anybody can give you money. Everybody out there is giving out monies, but how do you manage that? And that's where the difference comes in at the end of the day. So you know what? Brilliant program. Thank you to GrandWest. Thank you to Optigrowth. You know what? You can only go up from there.
No, you certainly can. Damian, looking at all of this, this is the language of the business, probably the most essential bit of the business. Because, like I said, my opinion is everybody wants to get to that next level. We know this is truly, truly essential. Once you start getting it on the roll, it seems to be easier.
I think the takeaway for me would be anything with regards to this sort of discussion is it's not the easy one, right? You're tackling quite a hard topic. You're tackling quite a hard area of your business, which most people tend to shy away from. It's not going to happen overnight. So take the efforts, and I think like Rhoda mentioned, you've got to work it a bit. You've got to be willing to learn something new. I think as a business owner, if you're not constantly evolving, constantly learning, your business is going to have either quite a quick death or very slow, long, drawn-out death, right? So the more we can evolve, the more we can start reading into critical items like financials, understanding what our business is doing and where it's going, and then reach out for help. I mean, there's nothing wrong with asking for good information, right? So if you have an accountant that you can trust or that you're working with, go and ask them, please break down my financial statement for me. Please show me my income statement and where things are going. Please explain why this aspect is over here, right? Please explain to me why I've got a loan account which I don't know about. The more we can ask questions, the more information we can have on hand, the better we can make decisions for our business going forward as well. So tackle the hard things. Open up questions and go and ask the tough questions. Go and do the hardcore assessment of, is my business healthy or not?
Exactly.
And we're going to be back soon, which is the exciting news, of course. We'll be back with another
episode. So the episode's going to be at, I think it's the 7th of December, Wednesday the 7th of December. Or again at 11 o'clock, we'll be talking about how do we show a customer value.
Ooh.
So not necessarily price of product, but how do we show the customer that price and value are two different aspects, and that the value outweighs the price of a product.
Ooh, value. That's where you're the expert. I look forward to that. That one is going to be absolutely brilliant. So firstly, thank you so much for being part of the show. Thank you for contributing. Thank you for the wonderful questions we've had as well. Now, as you know, when it comes to the enterprise and supply and development program that GrandWest offers, it is really to serve one thing. To make your business sustainable and as well scalable, which is super important, which is what any business owner wants. Now, of course, there's various criteria, of course, for you to be part of this, and I want to quickly go through this. What you would need is a business proposal, greater or equal to 51% black-owned EME or QSE, company registration documents, valid triple BEE certificate, sworn affidavit, valid tax clearance, certified identification documents, and at least 2 years audited annual financial statements. And of course, for further information, you can simply email chrissy.dyers@suninternational.com. It is as simple as that. To be in touch, but more importantly, this show has certainly given all of us watching this and being part of this a certain platform, so ultimately your business can be sustainable. So big thank you very much to GrandWest, and of course providing you with that assistance when it comes to enterprise and supply and development. Thank you very much for watching. Thank you, Damian. Thank you very much, Rayla. Thank you for being part of the show, and until next time, from all of us here at the GrandWest Bus Show, enjoy your day and all the best.